Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
Welcome to another episode of Tax Bites, and today is a continuation in the valuing of tax skills or tax preparation skills specifically. Again, whether you do them yourselves or whether you're having someone else do them, there needs to be this diligence, this understanding, this depth of knowledge, the risk involved in not doing something. That's kind of what this series emphasizes. There's more to tax preparation than what I think the average person understands. And this is going to probably be a very specific example where where IRS direction on things and what may actually happen in the IRS can be very divided. And not to get too deep, but what you can have is IRS out of Washington D.C. IRS out of Washington D.C. can give a direction broadly, an announcement to the public. This is what we see. This is what we think you should do in this situation. But the functions beneath it that are done even in offices outside of Washington D.C. They can be in North Carolina, Austin, Texas, wherever, processing returns or whatever, or matching things up, as this we'll talk about a little bit, and they just kind of didn't get the memo, kind of a thing, or the instructions aren't pushed down for whatever reason to a low enough level to change operational procedures in certain matters. So in this example, we're going to talk about the cancellation of debt, and that's when you owe money to somebody, you've gotten furniture, you bought a car, you bought a house, whatever it is, and that loan is forgiven, 10, 20, 30, $100,000, whatever's forgiven. And in tax law, that's considered income. You've got some value somewhere for that money you owe, and since you didn't pay it back, it needs to be considered income on your tax return. And what happens is the holder of that debt is required to issue this 1099-C. They get a penalty if they don't. They're going to get penalized for not issuing this. If they were supposed to, they'll get a penalty. Generally speaking, if they're not supposed to issue it, nothing really happens. Technically, they could get one, but in reality, in all practical terms, there's no repercussions for misissuing this 1099-C. So they issue it. The point I'm making is it's probably more of a risk management issue to issue it even when you don't have to. If you're the holder of debt, you've forgiven the debt, you're just going to issue it just to avoid any risk to yourself as a company. But it reports the amount of debt that's been canceled. It's sent to the IRS. It's supposed to be sent to the taxpayer. A lot of times it's not. It's kind of phantomly issued to the IRS only. At least that's my experience. And so this gets issued 10, 20, $30,000, whatever, and it has to go on the return to report the income or on the return in a way to show why it's not, because there are exceptions. Here's an example that's recently come out. This is an article in CPA Practice Advisors, and they put this information out, and I don't read it much, but a friend of mine, David Schwartz, kind of posted it. So giving a shout out to David Schwartz, enrolled agent, who put this out on LinkedIn, and it came in my feed. And it basically says the IRS is saying certain discharge of student loans are not to be income. And I'm not going to go into the complexities of it. They're just saying in these particular situations, if you're holder of that debt, that student loan, you don't really need to issue one, and we encourage you not to. Not saying anything. It says to avoid confusion, IRS strongly recommends that these creditors not furnish students nor the IRS with a Form 1099-C. Just encourage. Doesn't say can't, shouldn't, or whatever. Just says encourage, or recommend. I should say the word recommends. So they're not implying there's going to be consequences if they misissue. Just saying you shouldn't. You recommend you don't do it. The reality is it's probably going to happen, and this person's going to go, I thought this wasn't income, and either put the 1099-C aside. It's not supposed to be income. The IRS said so. I don't need to deal with it, or they won't give it to the tax professional, or maybe they don't even get it, as the case may be. And then the matching process happens, and the IRS got a 1099-C. It's not on the return, and now there's a letter coming out that the underreported type information, underreported income information, and the client has a tax problem. The preparation process would say, look, we can put this on the return with these legal sites that we understand now. We know how to put it on the return, report it in a way that will match. Also report in a way that it's not income in that calculation on that tax return. It avoids it, and you don't have a problem 18 months later with the matching process that will come. That's really a direct example of what tax preparation skills do. for the fee of that return or for your efforts individually to make that effort, you've avoided what will probably be a year-long fight with the IRS, 6 months to a year to explain and deal with as you move forward. So just something really simple here. Hopefully you understand where I'm coming from. Hope you understand the value of this. As always, I hope you'll please like and subscribe, and I hope you have a good day.